Good morning, Traderfirstyear. This is the 6/23/2021 morning forecast. Markets are implying a move of 1.03% up or down on the S&P 500. Markets have realized a move of 0.55% on the S&P 500 up or down. The difference between what market makers are implying and what has been realized has decreased. The spread decreased to 754 basis points. The put call and gamma imbalance favors put buying relative to call buying. Short put gamma on client purchases has the potential to exacerbate market sell-offs. However, a tightening spread reduces left tail risk and the potential for spikes in realized volatility. Realized volatility has decreased recently below 9. This is favorable for smaller moves up or down on the indices. I continue to expect a decreasing trend over the second quarter during the month of June. Current market environment is favorable for traders looking to sell convexity via short straddles, strangles, call overriding, put rights, and other short ball strategies to capture alpha. The MOVE index hovers around 50 to 55, or a movement of 3 basis points daily in Treasury yields. However, economic growth upgrades and rising inflation expectations were pushing up real yields, raising discount rates. The rise in real yields has diminished, lessening negative effects on long-duration assets, such as technology stocks and long-term bonds. The S&P is expected to move close to 1.83% up or down this week, which means the S&P could trade as high as 11% or fall 7% above its 200-day moving average, which is 3,799.37. The S&P traded well above its 50-day moving average, which is 4,181.59 last week. Full-year S&P earnings are expected to total 190 per share. This puts the S&P at 22.12 times earnings, which equates to an earnings yield of 4.5% and an inflation-adjusted real earnings yield of 2.13%, using the 5-year TIPS break-even for inflation at 2.37. Analysts are anticipating earnings in 2022 of 212 per share. At current prices, this puts the S&P forward earnings for 2022 at 19.7 times, or a yield of 5%, and an inflation-adjusted yield of 2.63%. Vaccine distribution is priced into Q3 2021, but distribution obstacles have lessened and efficacy for herd immunity remains in focus. Redefining herd immunity may become the norm, so instead of a fully vaccinated population of 90%, we may accept a different goalpost for full vaccination. Perhaps it drops between 70 to 75%. Details are currently unknown. The market is currently pricing in an additional 6.81% move up or down by September 17th. The S&P 500 could potentially trade as high as 4,432.72 and as low as 3,885.49 by September 17th. The VIX is expected to move 7.17%. The VIX is currently at 16.44. The VIX price range is 17.61 to 15.34. The skew index is elevated, which indicates market participants are paying up for catastrophic protection. Those are 2 sigma events. Stocks continue to offer investors the highest real returns. The nominal yield on equities is 4.5%, while the nominal yield on 10-year treasuries is 1.48%. Real yields on all tenors of government bonds are decisively negative. Real yields on U.S. equities remain strongly positive. Disclaimer: with realized volatility below 12, there is a large risk of a systematic highly leveraged short ball strategies like equity ball targeting and following and risk parity positioned for an increase in market exposure. The potential for sideways range-bound trading has increased, while a large sell-off has decreased. We are much more likely to see a fall in realized and implied volatility and a gradual melt-up in asset prices. The July-August fixed contracts at 18 and 20 are overpriced given the new economic outlook.